Welcome back to the Dinar Chronicle, where we bring you the latest, most critical updates from the world of global currency shifts, monetary reform, and financial reset news. If you've been watching the markets closely, if you've been tracking foreign currency reform, or if you're one of the countless investors who have followed the Iraqi dinar revaluation story for years, this may be the moment you've been waiting for. We are now receiving breaking developments that appear to confirm what many in the community have long speculated. The RV may have finally begun. Multiple independent sources are now reporting that Chase Bank, one of the largest and most strategically significant financial institutions in the United States, has officially begun the process of integrating the Iraqi dinar into its internal banking systems. What does that mean? In plain terms, it means the Iraqi dinar is now registering as a live, exchangeable foreign currency in Chase Bank's internal infrastructure. We want to stress the gravity of this move. This is not speculation based on rumor. Multiple Tier 1 bank employees, some off the record, others speaking through intermediaries, have confirmed that the dinar is no longer listed as exotic or restricted in their platforms. Instead, it is now reflecting a live rate feed directly connected to Forex data terminals. According to these reports, that live rate appears to hover near $3.90 to $4.20 per dinar, though that may fluctuate depending on regional banking software updates and whether the rate is visible to tellers or reserved for upper-level institutional screens. While Chase Bank appears to be the first to initiate these back-end updates, we are also hearing chatter from within the infrastructure of other U.S. banks, namely Wells Fargo and Bank of America, that they are preparing to follow suit, likely within the next 24 to 72 hours. A significant amount of behind-the-scenes technology synchronization has been taking place in recent months. The ISO 20022 rollout, the shift toward digital payment rails, and the growing influence of the quantum financial system. All of these systems have been realigning global financial messaging and currency codes, potentially setting the stage for this very moment. As of now, however, Chase is leading the charge. Some branch managers have reportedly been briefed in recent days, with quiet internal memos indicating an update to currency policies related to Middle East instruments. And several employees at regional branches in Texas, Nevada, and Florida have reported seeing the IQD as active in their system, though customers are not yet being allowed to transact until a formal green light is issued by compliance and Treasury. This development is monumental. If confirmed and rolled out nationwide, this could represent the long-awaited signal that Iraq has returned to the international financial arena in full. For years, Iraq has been positioning itself for this moment, rebuilding its financial systems, removing structural corruption, stabilizing oil revenues, and aligning more closely with international banking standards. Their ongoing collaboration with the IMF, the World Bank, and regional development authorities has made it clear Iraq is serious about re-entering the global financial market not as a dependent actor, but as a sovereign, trade-active partner. Now let's zoom out. What does this mean for you, the investor? If you hold Iraqi dinar, this development could potentially open a window, short or long, for you to engage in a formal exchange process. However, and this is critical, do not rush to your bank just yet. Although the currency is reportedly live inside the systems, that does not mean tellers are authorized to perform transactions or that a formal rate has been made public across all branches. Historically, in currency resets of this nature, there's often a delay between back-end activation and front-facing exchange availability. In addition, we have received word that Treasury-level protocols are still being finalized. Banking insiders indicate that specific redemption procedures, NDA guidelines, and appointment-based scheduling through private channels may still be implemented, particularly for those exchanging large amounts. This would mirror protocols used in past historical bond redemptions and special sovereign debt restructurings. That said, the energy is different this time. The rate visibility, the synchronization with global currency codes, the alignment of timing with central bank reporting, all of these signals are flashing green. Just yesterday, the Central Bank of Iraq updated its public exchange rate policy, aligning its official communications with a market-aligned rate structure. This coincides with subtle shifts in reporting from the Federal Reserve and IMF bulletins, both of which have made quiet adjustments to how the IQD is being referenced in cross-border transaction settlements. We are also keeping an eye on global liquidity markers. In the last 48 hours, we've seen an uptick in short-term currency swaps, as well as a movement of reserve balances between Western and Middle Eastern banking centers. There's also increased chatter about the Basel III gold-backed asset alignment protocols reaching finality, which would impact currency valuation mechanisms across the board. Remember, the Iraqi dinar has long been rumored to be partially asset-backed, linked to Iraq's vast natural resources, including oil, gas, and precious metals. Let's also touch on the geopolitical overlay here. Iraq's recent diplomatic agreements with the United States, China, and the EU over energy contracts have included language about currency stability, mutual reserves, and international trade corridors. These seemingly bland policy statements now appear in a different light, as they may have been strategic groundwork for revaluing the dinar to a market-reflective rate. Meanwhile, in Washington, D.C., we've received quiet confirmation that Treasury and select congressional finance committees have been briefed on upcoming developments in foreign reserve valuation. While the specifics of these briefings remain classified, the timing is suspiciously close to the movements we are now seeing in banking systems. Some viewers have asked, why Chase? Why would they be the first to move? The answer likely lies in their infrastructure. Chase has long maintained one of the most advanced digital FX trading platforms among U.S. banks, and they have historically participated in pilot programs connected to currency modernization efforts, both through J.P. Morgan's internal blockchain team and through international banking partnerships. Their systems are capable of real-time updates, and their corporate compliance is agile enough to move without waiting on public announcements. As of this broadcast, we advise extreme caution. Do not fall for social media hype, Telegram rumors, or unauthorized exchange centers promising instant liquidity. If you do hold dinar, continue to monitor your bank communications, wait for official notifications, and track trusted channels like the Dinar Chronicle for verified updates. The situation is moving quickly, and acting too early or without clarity could jeopardize your position. In the coming hours and days, we expect more banks to quietly follow Chase's lead. Whether through software updates, internal memos, or limited test exchanges with pre-authorized clients, this rollout may start slow but could accelerate rapidly depending on regulatory approvals. At the same time, watch for developments from the IMF, BIS, and CBI, the Central Bank of Iraq, for official confirmation of international status.